Good morning and welcome to Rising. We have an even better show for you today than we did yesterday, if you can possibly believe it. Brianna, what are we getting into this Cinco de Mayo?
Well, we're going to look back at some of the highlights from yesterday's hearing with DHS over their new Disinformation Governance Board. And our panel will weigh in on the major COVID outbreak that happened at the White House Correspondents' Dinner. But first, yesterday, President Biden said that the federal government will pay down the national debt this quarter for the first time in 6 years. Here's Biden making his announcement yesterday.
Let me remind you again, I reduced the federal deficit. All the talk about the deficit from my Republican friends, I love it. I've reduced it $350 billion in my first year in office. And we're on track to reduce it by the end of September by another $1.5 trillion, the largest drop ever. I don't want to hear Republicans talk about deficits and their Ultra-Maga agenda.
Biden's comments came just before the Federal Reserve announced another hike in interest rates geared toward easing inflation. The central bank raised the rate by 0.5 percentage points, doubling the size of the typical quarter-point increase, as the agency cites Russia's invasion of Ukraine and China lockdowns as major inflation risks. Now, the Dow jumped more than 900 points after Jerome Powell revealed the measure, though investors on Wall Street hailed the Fed's aggressive rate hike.
Economy reporter at Business Insider, Ben Winck, writes that the increase will have dramatic effects on the economy in coming weeks and will directly translate to higher mortgage rates, pricier car loans, and larger interest payments on credit card debt. Ben Winck joins us now to break it all down. Ben, great to have you on the show.
Thanks so much for having me.
So, Ben, you mentioned, obviously, in your article that these interest rates are going to, redound to the deficit of the consumer. Is it still a good idea, though? Will it be effective in bringing down inflation?
Right. So the Federal Reserve and Chair Powell said yesterday that, the problem here is this massive gap between supply and demand. Like you mentioned earlier, these COVID lockdowns in China and Russia's invasion of Ukraine, that's really hitting the supply side, but the Fed can't really do much about that, right? That's just a massive, geopolitical issue, the COVID issues, but they can really affect demand. And that's what they're doing here, right? Raising interest rates and making loans and borrowing more expensive. That's an effort to sort of rein in all the massive spending that we've seen over the past year. And that's really, all that spending has really driven this massive gap in supply and demand. And that's been fueling the inflation that we've been seeing now for really the past several months.
Well, right. And when Biden touts his deficit reduction, right, what we're actually talking about here is just the fact that we're not spending, we don't have a massive COVID spending package, and also that he wasn't able to get through Congress a lot of the spending he wanted to get through. So it's right. Am I missing something there? It's kind of weird, I think, to brag about because Congress stopped you, denied you from doing what you want. Now we're actually reduced the deficit, but that wasn't by intention.
Right. I mean, yeah. When Joe Manchin gives you lemons, you make reducing the deficit lemonade, I guess. It is a more positive way to put it. And I'd also say, back in early in the Biden presidency, when they passed the latest stimulus bill, the 1.9 trillion stimulus package, there's a lot of opposition from Republicans saying, this is just going to boost inflation, right? We don't need more aid. The economy is healing. We have COVID vaccines rolling out right now. This support isn't needed. And sure enough, yeah, we've seen inflation surge since. Now, it's not solely because of the stimulus package. We've had these supply chain issues. We've had new waves of COVID since. But this is Biden in a sense saying, yes, inflation is really high, but we're now working toward trimming down the deficit and sort of giving the counter to what happened back when the stimulus was passed. Now the Fed and the Biden administration are both shifting toward more austere measures, kind of reining in all that cash that was flowing into the economy earlier in the pandemic.
So, but on one hand, there is this desire to raise interest rates to basically lower demand. On the other hand, you have these conversations about price caps on specific goods like gasoline, which have become really, it's a good that has become very politicized in the context of this election year. Is this a kind of circular policy making? Is there a principle in effect in talking about price caps out of one side of your mouth and then raising interest rates on the other?
I think it's two sort of different sides of the same inflation problem. Like on one hand, yes, there are all these talks about how can we lower gas prices, especially going into the midterms, right, where Democrats are trying to alleviate this inflation problem, or at least show they're doing that as best they can. We've heard about the gas tax holiday as a potential idea. Biden has released some crude oil from the strategic reserves that we have here. Allies have been doing that as well abroad. But at the end of the day, that doesn't solve that's more of a Band-Aid, right, to this problem. It doesn't solve the inherent gap that we have in the amount of oil that's hitting the market, and how much demand there is for that oil. Especially with COVID cases at relative lows, people are out traveling, acting like, or behaving like, the worst of the pandemic is behind us, and it is. But there's all this demand for travel, for driving, for traveling around, and we just don't have the supply now. And so what the Fed is doing, that's a more long-term move, try to lower demand, not just offering a temporary aid through lower prices, but actually lowering demand in that equation that's been driving inflation higher.
Do you think that this is something that resonates with a lot of voters? Obviously, the Democrats are in real trouble. Biden's numbers are way down. And, something traditionally that Republicans have hammered Democrats on is, reckless spending, out of control spending, expanding the deficit. Then, of course, when Republicans are in power, they do absolutely nothing to rein in any of those things. So is Biden trying to take some wind out of their sails by, talking about his spending in this way?
I think he is, and especially, like I said earlier, especially with all the arguments about how stimulus is going to boost inflation, and then that coming true. This is, kind of patching up, at least, or maybe kind of changing the narrative around that, right? He's now shifting to this, I'm cutting the deficit messaging, and especially with inflation still very high, and Republicans are sure to hammer Democrats on that, as we see midterm campaigns ramp up. It's definitely, that's definitely the sort of calculus going on, at least in the White House. Now, is it too late, I think, is the big question. And inflation, at least through March, was 8.5%, or in the year through March. That's extremely high. There's some forecasts that might be the peak. We've seen some signs, at least, small indicators like shipping rates and, inventories have improved. So maybe that is the peak. And maybe we do see inflation drop before the elections. But, looking to past, election years that also had really high inflation, it's, if that's precedent, it's too late. And yes, the messaging is going to help, but really the damage isn't done. People are still paying a lot more for things than they did a year ago. And I should add that, yes, inflation might have peaked, and yes, it might be on a downward trend from here on out, but how quickly it returns to that 2% level that the Fed wants to see, that's still the big unknown, and odds are it's going to take a decent while for that to happen.
There does seem to be this asymmetry between how ordinary people are doing in the context of the pandemic and how billionaires have done, how the extremely rich have done during the course of the pandemic, where we've seen them grow their wealth by, like 50% at a time when the rest of Americans are struggling so much. I wonder, is there any, policy way to address the increasing costs and lowering demand among ordinary Americans and the out of control spending that has come from the upward transfers of wealth from some of these COVID bills to the very, very rich? Is it right to conflate, say, the recurring, the $2,000 check that never came and the effect of that might have had on inflation to the huge amounts of money that have gone to the very, very rich?
I think it's tough because obviously, we tried to do this recovery differently than we did the recovery after the Great Recession, right? There's far less stimulus cash back in the late 2000s, early 2010s, and it was a much slower recovery. So what we've seen over the past 2 years is sort of, okay, let's try the opposite. Let's flood the economy with stimulus. The Fed, cut rates to zero again, and then did more. There were plenty of emergency lending programs, and we had a very fast recovery. Yes, inflation is high, but make no mistake, we've had a jobs recovery that's 3 times faster than that after the financial crisis. Spending is up. Household spending is at record highs right now, even with inflation at the levels that we've seen. Now, because of that fast recovery, I think that's really been behind a lot of the wealth gain that we've seen among billionaires, right? That they have so much of their cash, most of their cash, tied up in markets. And markets have seen that we've had this massive rebound. Some would call it V-shaped. And because of that, because of this really fast recovery compared to the one we had before, asset prices have soared. Now we've seen that dented a bit in recent weeks. Stocks are not at the highs that they were at just a few weeks or a couple months ago. But because of that, that's why billionaires have gotten so much richer. And I think as for policy solutions, I think that's really tough because you've already seen Democrats struggle to pass or agree on anything that would target billionaires, right? A wealth tax or a tax on capital gains. They can't agree on how to go about that, how to maybe level that playing field. So as far as how to fight inflation while also not hurting lower and middle income households and mainly focusing on the wealthy, that's most of the fight with inflation is the Fed's job, and they're not really concerned about that right now. What they want to do is just get inflation back to that 2% level.
Well, Ben Winck, thank you so much for joining us. We really appreciate it.
Thanks for having me.
And we'll have more Rising right after this.